What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Tesla stock, ticker symbol TSLA, on a variety of time frames in anticipation of the next trading day, Wednesday, May 29th. All right, guys, Tesla stock here today is down $2.49 per share. That's minus 1.39% in regular trading hours. It is down a little bit here in the after hours. Volume's very low. Take that with a grain of salt. But let's take a look at Tesla as we head into tomorrow, now Wednesday, and get the best feel we possibly can based on all of the data and the psychology that the market was willing to present us with today, starting with a quick volume profile analysis, peeling back the onion to reveal that data beneath the waves, right, on the 5-minute chart. By the way, if you are new here, first of all, welcome. Tesla is a daily upload, so I appreciate you subscribing to the channel, and I will keep the Tesla analysis videos coming every day. Now, if we take a look here, I'm particularly interested in that opening drop and recovery, and we'll take a look if we can see any bias at all. Now, first of all, before we really talk about this, if you're a bear, what are you looking for? Well, it's a moderate red day, right, down 1.4% approximately. So what you really ideally would want is probably about moderate bearish bias to support that price action. Okay, now if you're a bull, we can't go expecting massive bullish bias on red days, right? So realistically, what we're looking for is going to be something more like no bias at all, right? Because that would not support the move at hand, the move that we inevitably ended up seeing today, which, you know, we know what happened in the price action. So ideally, we wouldn't have that supporting factor once we look at the volume. So when we look here, guys, the truth is the open here on Tesla is quite contextual. Now, we got higher volume than might be average off the opening bar. But like if we look back to Friday, we got 2 million. This morning, we got about 3 million. I wouldn't call it so ridiculously out of context, but we'll keep that in mind. We got a little bit of a higher volume opening red bar. So someone might argue, okay, there's maybe on a scale of 0 to 100, 100 being the most amount of bias we could possibly see, maybe there's 10% bearish bias off the open just due to the higher than normal, a little bit higher than normal volume on that opening bar. But it's just one bar, right? I don't like to go off just one bar. So what do we get from there? What's interesting is we see the contextual fade in volume. But if you notice, the green bars consistently pop, and then the red bar that follows fades. Pop, fade, pop, fade, pop, fade, pop, fade. It's so consistent that I don't think it can be ignored here. So I'm going to go ahead and assign something like 15% bullish bias on the fade or the recovery with the fade in volume. Volume profile here this morning. Moving through the rest of the day, guys, a lot of it's really contextual. This through here, there's not enough there to really assign anything. And then into the close, this big, scary looking red bar, that's just a rebalancing bar. You can tell, first of all, it has a large wick. Second of all, there's very little actual movement. And third of all, we know that a lot of algorithms for rebalancing trigger at the closing bell or after. That's going to drive a lot of volume, just buying and selling. Honestly, kind of junk volume, I tend to ignore the rebalancing bars. So we're getting a slight offset of maybe a little bit of bullish bias, if anything. It's very slight, by the way, but a tiny little offset to the bullish side in the volume profile, which is really interesting to get on a red day, or really on any day. It's interesting no matter how much it might be. It's interesting to see bias that ends up falling kind of in the opposite direction. It tells us a lot about the day. Now, I understand that the volume profile is one of the more difficult things in these videos to follow, so let's move on to something much more simple and highly, highly effective. The psychological self-fulfilling prophecy levels, starting with the very simple 30-minute chart. The white line is that 50 period, the gray line, the 200 period. Now, if you guys recall the weekend video heading into today, what happened last Friday was we reclaimed both of these levels on the 30-minute after giving them up last Thursday. Well, today we gave both of them up yet again. Okay, we came in downside in the pre-market. I don't like to take pre-market as an incredibly definitive move. Volume is just very low. We faded through. What we really wanted to see was a retest as the intraday session volume is kind of there. We retested both of these, honestly. You know, we got the retest, rejection off the 50, but we also got that wick up to the 200 that also rejected. So this is a fair, I would say, win on the 30-minute for the bears. Remember, the 30-minute is the shortest time frame, and it can change the quickest. Something like the daily and or the 4-hour, they'll change day to day a little bit less consistently. Not to say that they can't. Of course they can, and oftentimes will if things are looking tight on those charts. But the 30-minute, you know, this can flip day to day. It's probably the most, I hesitate to use the word exciting, but it probably is the most exciting chart out of these three, just because so much can change in a single day. And we've seen that now. We flip-flopped here the last 3 trading days. Bears, you gave that up, rejected off the 50. It's looking good for you guys. Tomorrow, if you're a bear and we retest the 50 period, you want to see that reject just like we saw intraday, middle of the day today. Hold that as resistance is the goal. Bulls, the goal is ideally get up through both of those levels on high volume. Let the volume carry us through. Retest whichever one happens to be higher at the time. Probably the 50 period might get dragged up in a high volume upside and move through. Retest, hold the higher level, and bounce away again on a high volume. Okay, claim those as support. Yet again, the earlier in the day, the better. The 4-hour chart. You can see things are looking pretty tight here on the 4-hour, so things can change. You saw, or you see now here, we gave up that 50 period today on the 4-hour. Not ideal, you know, but it's so tight that this can change as early as tomorrow again. Okay, we're like a point, less than a point off of that 50 period. So bulls, the goal, very similar to the 30-minute, get up through the 50, claim that as support. Bears, any upside test of the 50, reject hard, right? This is like a baby rejection. Reject hard. That ideally, in the near term, can set you guys up for a move down for a downside test of that 200 period. Now the daily, arguably the most important chart of all. We currently find ourselves approximately, you know, more or less about 2 3/4% away from the 50-day moving average. So it's actually not as small of a move as it looks. It's almost a 3% move that's required to retest the 50-day. Obviously, if I'm a bull, I don't want to give that up. Bears, your ultimate goal here is to give that up. But I think the real story here on Tesla is the 50 period to the downside and 180 to the upside. Bulls, the goal is to reclaim 180 as soon as we possibly can, just because that's been an area that we've been struggling with now for weeks. Whereas bears, if you test 180, you want to continue to reject that, head down toward the 50-day for that ultimate test, which obviously you guys want to get down below if you're bearish. Now, implied volatility did jump up a little here today, you can see. Now, in comparison to the last week, we're just about flat. In comparison to the last month, we go back to the 28th of April, or I suppose the 29th, and you can see that we're in, I would say, the mid to high range. Okay, we had that one day that was higher, but then that faded very quickly, right? So I'd say we're in about the mid to high range compared to the last month. And compared to the last 3 months, I would say we're in the low to mid range. Okay, understand the context of that if you're trading options. Very, very important. It goes into the pricing of your contracts, and you don't want to end up on the wrong side of implied volatility. Now, expected move. The next expiration we have, we don't have the luxury of dailies here on Tesla. Not yet. I think we might see that in the next decade. Okay, they're adding just the, I don't know if a lot of you guys realize this, but if you've been trading since before 2020, the options world has accelerated like tenfold because the volume has poured in and they are scrambling to add expirations everywhere. Right? I mean, believe it or not, there was a time when there were no daily expirations on something like SPY. There was a time when there were no weeklies, right? But the dailies are just within the last couple of years. So really, don't take those for granted. I think we're going to see those on the bigger blue chips in the next decade, ideally sooner. But they have to be careful, because if they start adding dailies to Tesla and the volume's not there, you'll end up with really, really wide spreads, and people who don't know will end up getting hurt. So they want to be careful with that. They want to have enough volume to cover all of those new contracts. But with weeklies, it'll have to be good enough for now. And we have to do a little bit of educated guesswork, but that's trading. So let's do that. The next expiration we have is Friday's close. The expected move by Friday's close compared to today's close is plus or minus $6.56 per share. Here's what we do, because we want to get tomorrow, right? Divide that by 3 trading days, Wednesday, Thursday, Friday. Add back 50%. That gives us an expected move of tomorrow of approximately plus or minus $3.28 per share. That's approximately the 1 standard deviation expected volatility being priced in for tomorrow's close. But now directional bias, because that's the volatility bias. What about directional bias? We have 1.13 million total contracts traded today. 642,000 of them were calls. 491,000 were puts, so we're seeing a call side bias on the overall. It's not overwhelming, but it's there. Okay, now if we break that down by the 0 to 20 delta range, the short-term speculators, we have about 249,000 calls, 182,000 puts. Again, call side bias, not ridiculously overwhelming, but certainly there out of the overall, but also the short-term speculators here on Tesla today. Listen, guys, if you want to get grandfathered in to our private community, I send out my personal scalp setup alerts every day, my personal in-play stock alerts. Those are the stocks that, especially lately, have been making up the majority of my trading volume, just because there's been, for a while, like a year or so, maybe a little bit more, maybe 18 months, we saw a big slowdown in upside momentum in those in-play style stocks. That was huge in like 2020, the back half of 2020, 2021, and that has since returned in a big way. It's always around, but it becomes a lot harder to find. Lately, they've returned in a big way. The last week or so has been a little bit colder, but big picture, they're back. So I'm sending out those. I'm also sending out human verified unusual options. I verify those myself to ensure that they're actually unusual before the alert goes out. They're not just bot driven. And of course, working my platinum one-on-one group. Those prices, those will be going up very soon when we change the pricing structure, when that's all set up. So you can get grandfathered in at the link in the pinned comment. And if you do that before we make the change, or if you're an existing member already, nothing will change for you. It'll stay exactly the same. The new format will simply be for for new members, people looking to join. So listen, I'll see you inside. And if you appreciate the daily Tesla videos, please leave a like on the video, and then get out of here and enjoy your day. I appreciate it, and I'll see you in the next one.